All right, folks, going into the weekend, my next guest was in an honorary mood, but I think USA Hockey might have tamped him down just a little bit, but he's back in an honorary mood. I want to bring in Brian Wesbury. Brian, you were on fire last week, my friend. And one post you said, in my 40 years of being an economist, I have never seen the Fed more overtly political. I'm on the same page as you. I wonder why and no one else would either A, see it or B, acknowledge it.
Yeah, you know what? I think everybody, it's all about, I think, Trump derangement syndrome in a way. So if he does something to make the Fed mad and then they respond, somehow that makes it Trump's fault. And I just don't buy that at all. If you really go back, all of this started, for me, especially back in 2008 when we started quantitative easing. And what quantitative easing is the Federal Reserve lowers interest rates almost to zero, pulls down the 10-year yield, and then by doing quantitative easing, they buy Treasury debt. So we issued a lot of debt during the great financial crisis. Then we did it again during COVID. In other words, what government got to do was sell bonds to the Fed and not to the private sector. If the private sector, if only banks and pension funds had to buy those bonds, the Treasury would have had to pay a much higher interest rate. So what the Federal Reserve did is it got itself involved in the financing of our government. They directly monetized the debt. And to me, that is more political than anything that President Trump has done to this point. That's when the Fed created its own problems and got politicians after them.
Is that what they call another term for that? Is that fiscal dominance?
Yeah, fiscal dominance and monetizing the debt. I actually think there are people at the Federal Reserve and at the, not today's Treasury, but the Treasury in the Biden administration who truly believe in modern monetary theory, which says that we can borrow as much as we want and the Federal Reserve can print as much as they want to pay for it, and there will be no cost. And of course, now we know there's a massive cost. We had 9% inflation, and then on top of that, because of all this money we've printed, what's happened is we have massive inequality in our country. I think the policies that the Federal Reserve has followed have created more inequality than any set of policies ever in the history of the United States. And that's now affecting our political world, because if you have haves and have-nots, that's how you end up with a socialist mayor of New York City, because it's the have-nots think it's the rich versus us, and really it's all because the Federal Reserve printed too much money.
You know, I'm going to pick up on that in my take, and if I had a tambourine, I'd be playing it loud and clear because, and it's not even the have-nots in the traditional ways. People who are doing well, but because we're on the verge of having our first trillionaire, they feel like they're not doing well. I got to sneak in this to comment. You get your thoughts on AI, right? You've kind of written about it maybe in the past as somewhat hype, but obviously the impact of some of these stocks seems excessive at this particular time. But could the market always also be telling us that it's inevitable that AI is going to remake everything about our economy? And if that's the case, how do we react? How does the Federal Reserve react?
Yeah, well, okay. And what I'm going to do is compare this, and I want to be careful here, to the late 1990s. And I'm not trying to say we're about to have a crash like 2000, 2001. That's not what I'm saying. But if you remember, broadband, everybody should remember it. We were putting broadband everywhere. That made high-speed internet. Then Wintel came in, Windows and Intel chips, and it made computers much faster and much better, and it changed the world. And none of us want to live in a world without that. But during that buildup, those stocks got overvalued. And I believe that AI will also change the world in a good way. When we look back, I mean, I know there's some scary things that people think, well, let's just ignore those. But it's going to make us more productive. The problem is, I think the stocks involved in that area today are overvalued. And so I stole this from somebody, and I don't know who it was, but we overestimate the impact of technology in the short run. That's what the market is doing doing today, and we underestimate it in the long run. And so I think sometimes we get ahead of ourselves, and that's where we are today, at least in my opinion. This market, to me, is overvalued.
Brian, I wish we had more time. I gave a speech in Key West, a lot of folks from the Midwest, and they kept saying, but Brian Wesbury said this, but Brian Wesbury said that. Talk to you again real soon.
Hey, Charles,
Right,
wait, before we go, I want to say happy 69th anniversary to my parents, Stu and June Wesbury in Pennsylvania. Thanks for letting me do that.
You got it anytime. And yeah, happy anniversary indeed.